Amazon giving markets a treat this Halloween Friday. Nancy Tengler of Laffer Tengler Investments joins us. Okay, Nancy, strong earnings from Amazon thanks to AI demand boosting the stock today, the broader markets. It's the same week the company announced a lot of AI related layoffs. The stock has been a laggard among the Magnificent Seven. Not anymore. What's your takeaway?
Yeah, so Lisa, we own it in our 12 best ideas portfolio and our growth portfolio. We love the CEO. We love the story. What happened last quarter was AWS, which is their cloud computing business, lagged. And what the CEO said, Andy Jassy said, was that they were capacity constrained. And it turns out, in fact, that was true because we saw strong growth from AWS. But interestingly, we also saw advertising hit another record high at $17.7 billion in the quarter. And what Andy Jassy told us was that AWS cloud computing volume in October was bigger than the whole third quarter. And so that was not included in the results. We'll see that next quarter. So I think what you're seeing is a company that is delivering. They are rationalizing the business because they overhired during COVID. And so now what they're trying to do is become quicker, faster, reduce layers in corporate management. And indeed, that is what they're doing. And they're going to grow the retail business with the same number of employees, but they're going to double it in 5 years. So that's pretty impressive. And as a shareholder, I kind of loved everything. And I think you continue to hold it. If you don't own it, I actually even think you buy it here.
So, a slew of other big tech earnings this week. Which ones spooked you and which ones were sugary sweet? Sorry.
No, it's great. Happy Halloween. I think for me, I thought it was one of the best quarters for Microsoft ever. And the stock didn't react accordingly. I just think that's short term and that you'll see the stock turn around. ServiceNow was amazing. Meta was disappointing in that the CapEx budget that he describes is pretty robust. And what he's saying is, well, if it doesn't work, we'll cut back. But this is a company that gets 95 or 98% of their revenues from advertising, whereas Microsoft is monetizing AI in all sorts of ways. So I think you want to pay attention to Microsoft, ServiceNow, and then Apple, which is, and both of those are in our 12 best ideas. Apple, which is, the defensive name that we own in technology, in our ETF, TGLR, in our 12 best, they delivered an incredible quarter on iPhones, and that is what the stock trades on. But services hit another record at over 100 billion. So this is a name you can just hold for the next 5 to 10 years. They have been disappointing in AI. They continue to be disappointing. Ultimately, they'll get it right, and that's kind of their thing. Brand first, and you don't need to be first to market. You want quality, and that's what they're doing. I mean, they've had a lot of fits and starts, Lisa, and you could say it's been spooky, but I think now they're coming out of that.
In other big names, Netflix's stock is up today. Reuters had an exclusive this week that it's looking around to potentially buy Warner Brothers. Big news there is the stock is also poised for a 10-for-1 stock split. Is this a time when retail investors should jump in if they don't own the stock?
Yeah, well, what the stock split, yes. And what the stock split does is it allows the other indices like the Dow to, I mean, Apple did a stock split right before they went into the Dow. So this is something that because it is a price weighted index as opposed to the S&P, which is cap weighted, the price actually matters. It also matters for retail investors. Even though you can buy fractional shares of $1,000 stock, it's really much more comforting to own 100 shares of $100 stock. So I think it will drive demand for the underlying shares, but importantly, it may open up the company to be added to one of the indices that it's not in, and that usually also drives stock performance. The Paramount purchase, super interesting, not really in their wheelhouse normally, but they may actually step in and surprise us all.
I think you meant the Warner Brothers purchase
Sorry, I
there
meant Warner Brothers.
because there
Sorry,
was a big
sorry.
purchase involving Paramount recently. But anyway, let's pivot and talk about the Fed. It was a big week for the Fed. Jerome Powell announced the expected 25 basis point rate cut. More unexpectedly was that he told the market to not necessarily bet on a December cut. Now, we were supposed to get the PCE inflation data today, didn't get it due to the government shutdown. Jobs data supposed to come next week. Probably, I guess, won't get it, depending on what happens. So where does the Fed go from here?
Yeah, so I think when the history is written, this will be a Fed that will be utilized as what you don't do. Because this Fed has said things like, we're not going to cut 70, or we're not going to hike 75 basis points, and then they did 2 weeks later. So this notion of standing up and saying, this doesn't mean we're cutting in December, it's really not the Fed's job to tell the market what they're going to do. And I don't think they know, as you rightly point out, there is no data, which, by the way, I find super exhilarating because I don't have to parse every number that's going to get revised anyway. I can just listen to the companies during earnings season, which is great. But so I think a couple of things, they also announced that quantitative tightening was going to end. And that is due to the fact that there's concerns about liquidity in the market. But interestingly, when Meta came out, Facebook, and said, we're going to issue debt and we're going to issue $30 billion of debt in 6 tranches up to 40 years, they were oversubscribed 4-to-1. So there is liquidity, and I think the Fed would just do well to pay attention to their mandate, which is price stability and employment. And I think employment is a little better than the numbers might indicate, simply because they've been revised so much. And what we're seeing in the JOLTS numbers is companies are not hiring, but for the most part, though, this week we got a lot of layoff announcements. They're not laying off en masse. They're keeping employees. Walmart announced they're not firing anybody. They're going to keep employees and grow their business. That's awesome because that goes straight to the bottom line. So I think the Fed will likely stay on hold. I don't know if they should or not. I can argue both sides because the economy seems to be pretty robust if you look at earnings. And so you could argue that cutting will drive inflation higher. But you could also just, argue that they need to cut more because they're so far behind.